And as we start our discussion of the technical factors with euro-dollar, is I think more comfortable and more convenient to have a look at the chart while discussing the fate of the currency. Euro-dollar is currently trading in the area of 106. Last week, as we have expected, the euro has managed to strengthen a bit, but in line of our expectations, we didn't see a significant move above the levels of 106.50. This is still a resistance level, limiting the euro-dollar on the upside. The euro-dollar was driven to the upside last week by the weaker US dollar and stronger industrial production in the euro area. At the same time, as you may notice, the single currency didn't manage to step far from its recent lows. Political uncertainty keeps limiting the bulls, and the European Central Bank's December meeting minutes showed that despite improvement in the data, low inflation still remains a concern for the euro area. This week we will pay attention to German economic sentiment on Tuesday, to final inflation for the euro area on Wednesday, and of course the meeting of the European Central Bank, the first meeting in 2017, will take place on Thursday. As the minutes of the last meeting of the ECB have shown also that a few members of the central bank's governing council rejected proposal to continue quantitative easing beyond March. But at the same time, the ECB is not likely to change its approach in January, and we expect the central bank to keep its monetary policy extremely loose. As a result, if the US dollar starts to gain strength again, the euro will probably not be able to keep on rising. So the main factors here, the main drivers of the euro-dollar currency pair are the factors which come from America. So we can see that on the one hand, there was a spike to the downside on Wednesday. It happened on the disappointment of Donald Trump's news conference, when initially we have seen sells in the euro-dollar, but sellers failed to settle at these low levels around 105.80, and the candle on the daily chart closed on Wednesday in the area of 105.80. The minimum was, I'm sorry, I just misspoken. The minimum was at 104.50. So on one hand, such spike to the downside is kind of thing for the bulls to recoil from these lows to the upside. It's kind of a bouncing element for the pair. However, we can see that the moving averages still have the negative slope on the daily chart, despite the fact that the pairs managed to test and even trade for now above the 50-day moving average, which is currently at 105.93. Still, we are at the upper Bollinger Band, and daily stochastic indicator is close to highs, so it doesn't have the pair doesn't have a lot of bullish momentum to develop this movement to the upside, despite the initial failure to get lower, which was seen last week. If we can switch to 4-hour chart to see the picture in greater detail, here we can see that yes, the moving averages in the 4-hour chart are rather positive, and these averages provide us the levels on which we will look for support for the euro dollar. It's 105.70, 105.44, and 105.15. Still, once again, I point your attention to resistance area, which is found here. Here in the area of 106.60. This is the area. A kind of double top we have here, which actually welcomes lower levels of the euro dollar. And we will also watch the picture on the 1-hour chart. Here I point your attention to 100-hour moving average. It was a rather good reference level for the pair. If we can trace the pair's movements to the beginning of January, we can see that this line painted in green here and the chart actually acted as a good support and a good resistance for the pair, and was a kind of benchmark of where we have a bullish or a bearish market for the euro dollar. And I point out the fact that today the pair slipped below this line, which is now acting as the immediate resistance in the area of 106. And the 50-hour moving average is beginning to slope to the downside. So, to my mind, the near-term pressure on the single currency is negative, and we may test as much lower levels as 105.10, 105. The weekly pivot level, the level which separates the bullish area and the bearish area for the pair, is located at 105.93. And below this mark, we will focus on the first weekly support line at 105.03. And this line corresponds to the support line drawn through January minimums. So this is the focus area for the euro dollar on the downside. On the upside, the pair has resistance at 106.20. This is the previous highs of January. And if somehow the euro manages to recover and to overcome the area of 106.60, the next levels to watch will be 107.34. This is the first weekly resistance, and for a reference, I can tell that the second weekly resistance is located at 108.24. But I don't think that such bullish scenario is going to unfold. In my opinion, the better level to focus at is located at 105, and a failure at this support line of the weekly pivot points and the short-term upward movement of the pair will open the way down towards 103.70, 103.63. These are the levels for the euro dollar. All in all, here market players may once again try to start rebuilding their US dollar long positions after some correction, and if we will see a spike higher to the area of 106.50, I would look for signals that it's time to sell the currency pair. So it may happen that we will see more attractive levels to sell the pair around 106 50, or the currency will just remain within this downward movement and continue its way from here to 105 mark.